Hello and welcome to TechsRay, a podcast that's focused on looking deeper inside the announcements that are made by major companies in the technology, media, telecommunications space. I'm Tom Knoll, president of CIMI Corporation, and today we're going to talk about IBM, Microsoft, and the future of cloud computing. Let's start off with a summary of the earnings reports that I'm really drawing a lot of this material from. Broadly speaking, IBM and Microsoft were mixed as far as their results. Both IBM and Microsoft sort of beat expectations, kind of depending on what specific expectations you were talking about, but not by a large amount. Both companies had disappointing overall guidance for the balance of 2023, and that created more of a problem for them than their current results did. IBM sunk further because of free cash flow concerns. Microsoft recovered from their post-announcement dip because generally Microsoft was viewed by the street as being a smarter play for the cloud. But were they? Let's take a look at that. Cloud revenue growth for 2022 was generally lower, but it was particularly under pressure in the fourth quarter. Both IBM and Microsoft reported at least some slowdown in growth. Revenues were still up year over year, of course. It's the growth rate that was slowing down. Both companies suggested macroeconomic forces, meaning overall economic uncertainty, were the basis for the slowdown, and the guidance for both companies was cautious. Macroeconomics may have been a factor, but they weren't the real problem. The real issue is a misunderstanding of how cloud adoption is really happening. Moving to the cloud has never really been the driver. The driver for the cloud computing growth has always been hybrid cloud front-end, back-end application models, meaning adding some smarts, intelligence, and flexibility to the front end of applications that are still run in the data center. IBM and Microsoft are better aligned with this real model than Amazon or the other cloud providers, in no small part because they're actually computing companies who offer some form of software and server or data center product lines. And enterprises are now questioning their own cloud plans, which are still not aligned with this real model. So a combination of the fact that the old model moving to the cloud has been discredited, the new model isn't fully understood, and everybody in the cloud provider space isn't really on the same page with regard to this new model, is the reason why there's been a dip in the growth rate of cloud services. If we look at what Microsoft said on their earnings call, you get an interesting picture of them, perhaps more as having a hybrid platform than having a hybrid model for the cloud. One of the interesting quotes that they offered was that moving to the cloud is the best way for any customer in today's economy. And that's their public line, even though it's a representation of one, the discredited move to the cloud model, and two, it's kind of playing against their own dominant position in a real hybrid cloud. And there were, in fact, no hybrid cloud mentions on the call at all. The success examples that Microsoft offers were really online service-based. They cited applications for enterprises, but those applications were for the production of online services, not for the creation of cloud front ends for legacy applications, which is what hybrid cloud really means to enterprises. And in Microsoft's Office, Teams, and other SaaS features, software as a service features, are their real move to the cloud successes. Taking a look now at IBM's earnings call, you still see a very strong, explicit hybrid cloud focus. One of their quotes, "Our fourth quarter and full year results demonstrate the execution of our hybrid cloud and AI strategy." Another, "Our perspective is clear. Hybrid cloud and AI are the two most transformative technologies for business today." A third, "Hybrid cloud offers more value than relying on a singular public cloud." Overall, there were a dozen hybrid cloud mentions on IBM's call. IBM is therefore still positioning very strongly for the hybrid cloud model that's really been emerging, despite the fact that Wall Street and the media really have kind of moved on to something else that's newer and more interesting. So what does all this say about the cloud and about the future of the cloud? One of the things that's interesting is that both companies have added AI to their story. Even IBM tended to talk about hybrid cloud and AI together. showing that they really both want to align with the media and street buzz that's been surrounding AI, and in a case of IBM, have largely displaced the hybrid cloud discussions in the media's analysis of their earnings reports. Both companies believe that cloud revenue growth will be limited in 2023 and likely beyond, though, as I said before, they've tended to attribute this to macroeconomic reasons because, of course, macroeconomic reasons are expected to subside, and a more fundamental set of issues with cloud technology or cloud adoption would be unpopular to bring up in an earnings report. But IBM is the most likely to define a true hybrid cloud model based on Red Hat and containers. IBM has a vision about AI, and the vision about AI is really driven by the fact that the street no longer thinks that the true hybrid cloud vision is enough. So is Wall Street right? Is it possible that true hybrid cloud model is never going to emerge, or if it does emerge, that it's never really going to be enough to convince Wall Street that the future of these companies is an upward trajectory? IBM's hybrid vision is focusing more on the general container model and not on front-end, back-end thinking. So what that means is that while IBM is still committed to and in positioning against the hybrid cloud story, they're not really doing it in a way that acknowledges what the true adoption model is. And it's possible enterprises might still miss what's actually going on. Enterprises themselves are increasingly questioning cloud spending, and the whole moving concept is being deprecated among enterprises, in no small part because if the cloud is really more expensive than they thought it was going to be, moving is clearly not going to be a good idea. A true hybrid model, assuming that one was recognized, still wouldn't generate the kind of perpetual growth that a move-to model would generate, and that may be part of the reason why companies are reluctant to position strongly for this true model. But the problem is that without a true hybrid model, where it's very likely that cloud spending is going to continue to drop more than it would need to, because absent a real model of credible adoption, you have neither the technology will among enterprises to adopt a correct cloud strategy that's going to pay back, or the technical framework that would make them confident in their capability to do that. So that sums up my position on IBM, Microsoft, and the cloud. You can read through this legalese for your enjoyment. It's mostly going to be important for those who might want to cite this report, this podcast, in some of their material. And please pay attention to this because we don't want any other form of usage evolving, and we will take action if we have to prevent it. Thank you for listening.